Good afternoon, everyone. Can you hear me? Excellent. It's a pleasure to welcome you to this fireside conversation that I'm about to have. The topic is impact investing and financing resilient futures. It's a topic that sits at the very core of what ACSIS seeks to advance. So across the Global South, we're seeing an extraordinary convergence of creativity, ambition, and determination. Yet we continue to confront structural barriers that hold back the flow of capital to the very communities and innovators capable of driving transformative change. So in this discussion, we want to move beyond the familiar challenges and explore what is truly possible when we shift mindsets, build trust, and create meaningful connections between investors, entrepreneurs, policy leaders, and diaspora networks. And I am delighted to be joined by someone who brings a rare combination of entrepreneurial vision, investment expertise, and civic leadership. David Mullings is the chairman and CEO of Blue Maho Holdings, the only investment firm dedicated to giving retail investors across the Caribbean. David combines decades of entrepreneurial and financial services experience with a deep commitment to mobilizing diaspora capital for sustainable growth across the region. Under his leadership, the core company, Blue Maho Capital, became the first US-based company to launch the SEC qualified offering focused on the Caribbean and open to non-accredited investors. The company has reserved the NASDAQ ticker symbol IRIE, can we say IRIE? Positioning itself as a bridge between Caribbean opportunities and global capital markets. Born and raised in Jamaica, coming of age in Miami, David is passionate about creating generational wealth by empowering middle-class investors, particularly within the African and Caribbean diasporas. His mission is simple, yet ambitious: to unlock the Global South's potential by connecting global investors with the right opportunities to build resilient ecosystems for the Caribbean and the wider region. So over the next half hour or so, we'll explore what it takes to finance resilient futures, how we can bridge gaps between innovators and investors, and how narrative, policy, and purpose come together to unlock genuine long-term impact. Ladies and gentlemen, please help me welcome David to the stage. David's expertise and his cross-sector exposure between banking, hedge funds, private equity, media, diaspora policy, I think this positions him as the perfect person to speak on investor behavior and how to unlock this long-term capital for developing regions. So, from your vantage point across hedge funds, private equity, and diaspora engagement, what trends are you seeing in investor appetite for resilience-oriented investments in the Global South?
Oh, well, thank you very much for having me here in London. My brother and I have not been here as adults, so we are very excited that this is what brought us here. Mom went to nursing school here in the UK, and so you guys got us here. We're excited. I want to recognize.
Fantastic, fantastic, fantastic.
So big up David. And then my brother Robert Mullings is also my chief operating officer and the CEO of our real estate firm, so he's here in the room as well. So, and we'll be around later and tomorrow to talk with anyone who wants to speak with us.
Nice one.
In terms of that specific question about the mindset shift, right? Traditionally investors have focused on the big countries, developed countries, right? We don't use the word first world anymore. But that's what they're doing. They tend to focus on the US, Canada, UK, the EU, maybe Japan. And then when they talk about emerging markets, what they're really talking about is China.
Right.
If they talk about the Caribbean, they're talking about Latin America. They're not actually talking about the Caribbean, right? We talk about LAC, Latin America and the Caribbean, and they tend to leave off the Caribbean piece. And then when they talk about Africa, they tend to talk, they have this term sub-Saharan Africa. I think we need to get away from that term, firstly. And then secondly, they tend to focus more on minerals. Right? They're not talking about the kinds of investments that we think need to be made in the region. So I think that is now shifting. In Europe, certainly, they care a lot more about impact. Right? We don't know what the term is going to be. We call it sustainable investing. Is it impact investing? It keeps changing. The United States, unfortunately, has gone backwards. And so they don't talk about that term at all. Right? We are still fighting whether or not climate change is even real. So that has caused issues in terms of what pools of capital are really available, and then how do you sell it to them in terms of the vision. What are they investing in? So in the US, we do not talk about sustainability and the UN SDGs. We don't talk about climate change.
Even though the headquarters of the UN is right there.
It should move. It doesn't matter, right?
Wow.
Yeah, you have to understand your target market and then use the language that works for them. So in Europe, you definitely see a massive shift, wanting to do specific sustainable investments. They're asking for that, or they want to have a positive impact. They want to know which metrics are you going to use to measure those impacts, because measurement matters. On the US side, that doesn't work. You're not going to the pension funds and talking about impact investing or sustainability. They care about the return. It's as simple as that. What are the returns that you are going to get me, and how does it compare to the other opportunities that I have? That's the reality of today.
So a quick point you made about not referring to it as sub-Saharan Africa. Why do you say that?
Africa is a continent, and I think that when we say sub-Saharan, it means that we should only invest in certain places. I think the entire continent needs to be spoken about. That's why.
Okay. So what you think would it take to actually move more capital from interest to actual employment?
I think all of us in the room knows, if you try, anybody in here has ever tried to raise money to invest in the Caribbean or an African country? Well, of course, it's And so we tend to get the same thing, right? There's this perception problem. People think of the global south as not being developed enough. So we have to change that perception. So the first thing is we need to get them to recognize that in the Caribbean, small islands do not equal small returns. Right? There's this misconception that when I invest in a small island, it's only small returns. It's like, guys, there's billions of US dollars flowing through each of these economies, and it's not just tourism. So it's an education problem. So we need to educate them. That's number one. Number two, when you look at on the Africa side, everybody's jumping and saying, oh, look at all these people. We want to be able to sell to those people, but they don't have any money. Well, is that really true, though, that they don't have any money? And so what if you feel that at an individual level they don't have money, but when you're looking at a billion people, or where the next billion people are going to come from, right, that bottom of the pyramid, we don't have to chase the wealthiest people there. You can chase the growing middle class. In fact, you can invest in improving the size of that middle class. So again, it's helping them to see it differently. The majority of the people that you will speak to raise money from ever typically have not been to those countries. Right? Yes. So what they know is from social media. What they know is from the BBC or CNN. What images have been shown to them?
Oh, yes. We were speaking about that earlier.
Right. So we need to tell our own stories, and that is the advantage we have today versus 20 years ago. We have TikTok and Instagram, and we have LinkedIn. We need to show videos of the kinds of things that are being done. So when that video was shown of the Orange Growers Association in Ghana, those are the kinds of videos that we need to continue to put out there and get it in front of those people. So Robert and I spend a lot of time at family office conferences, especially in the United States. I'll probably speak at 5 for a year. And my job there is to make sure that they understand that there's real opportunities outside of call centers, outside of basic agriculture. Right? We can actually manufacture, we have technology that's happening, we can invest in financial services and insurance and telecoms. Oh, I didn't know. And of course, it's weird to me that you vacation in that country, but you don't leave the resort. You didn't think how these people live, how they make money, how does the economy run.
Yeah, there was a video, I think it was last week or shortly after Hurricane Melissa, and there was this person who was very concerned about the fact that she couldn't get breakfast the next day at the hotel. I don't know if anybody saw that, and you're thinking, there are actual people on the ground here that are suffering. So yeah, again, the mindset is quite interesting. But so how can we realistically, because I have to say that there's an issue of trust, I believe, sometimes amongst us. So how can we realistically engage now the diaspora to actually invest, to actually put their money where their mouth is and where their hopes are? And
I love that one. So trust is the biggest problem. Right? Before you can mobilize capital, you have to mobilize confidence. And confidence comes because there is trust. I believe that putting my money to work in this country, I will be able to get it back. Right? And the biggest mistake that I have seen, having worked in I worked at a hedge fund, worked in private equity, used to work for a bank. Everybody was just like, oh, you guys are so fixated on the interest rate. Here's a return I can give you, right? So in the private equity side, we look at internal rate of return. So we're not looking at getting an interest rate. I don't want just a 10% per year. I'm trying to 5x my money in 10 years. And that's not a percentage. Right? It's not 5% or 10%. If I'm lending you money, private credit, fine, 15%, 20% a year. 20 might be high. But people are saying, oh, I'm giving you a great offer. I said, I don't care about getting a return on the money first. What I care about is return off the money, right? The return off your principal is more important than anything. If I put the money into the country and I can't get it out, I don't believe I can get it out, I will never put the money there in the first place. So people need to understand that this country has a trustworthy legal system. That's number one that we have to be looking at. Because at some point I may have to sue you. So if I'm going to sue you, where is the legal jurisdiction for me to be able to get back my money, and how long is it going to take? Right, in the Caribbean, we run on CP time, Caribbean people time. Island time don't work. It's going to take me 10 years to sue you in Jamaica and get my own money. So where is an efficient court system? So that's number one for trust. Right, number two, the diaspora is already investing. But many of us have had that problem where we want to eventually retire back home, and you're sending some money to your cousin to build a house.
To build a house,
and you fly down in 5 years and he says 5 blocks and no house.
Exactly.
Right? We've all had that personal problem. Remember, we got an investor out of the Bronx, and he has an advisor. So his advisor comes on from JP Morgan. He's a Jamaican who has a church. And we brought them, this was in January, and we came down because we're building some affordable houses in Jamaica. So 700 one-bedroom houses, black and steel, climate resilient. There's a $17.5 million investment to build them. Okay. The houses cost $51,000. So 8 million Jamaican dollars, and the government, the National Housing Trust, provides a 100% mortgage for those houses. 70,000 people qualified, and we're only doing houses for 700. We announced 200 houses. 287 people applied for the first 200. But we need to bring in the money to build the houses. So we say, hey, if you write a check, come down and we're going to have you tour the model unit, meet the owner of the land, meet the developer. We want to see the 2 bedrooms that they built. We need to see it, touch it, feel it. This is real. And so they come. It's about 13 people fly down. We got out there and they were blown away. And the advisor pulls me aside after touring the 1 bedroom, tour the 2 bedroom, right, the 2-1, the 2-2. She sees a cement mixing plant on site, then she sees a water facility that's there, 3 groundwater wells on site. She pulled me aside and said, David, you know, if this is a scam, it's the worst scam ever because you're taking our money and you're actually building houses. And I had to laugh and I said, please go back to New York and just tell everybody that. We automatically look at people who look like us, who sound like us, and we assume it's a scam.
We assume the worst. I don't know why that
I
is.
thought that having something registered with the SEC, we're the only SEC regulated company in history that can take non-accredited retail investor money and invest in the Caribbean. Nobody's ever done that. I thought the money would come pouring in after that. The SEC, the Securities Exchange Commission, we're filing to go public. We're going to list on NASDAQ. And you know what a lot of people said? What is the SEC?
Oh my gosh.
The diaspora has not talked about investing in companies. We pool our little money together with our friend and then we go down and we buy a company or we buy a farm or buy some real estate. We have not built companies to then go and invest down there. And we don't like transparency, actually. We want other people to be transparent. We do not want to have to file and tell everybody, here's how much we're paying for marketing, here's our salaries, here's what we spent the money on, here's our profit margins. We actually, personally, I don't think we like the transparency. So we need to change that. Transparency gets trust, which then leads to capital. So we have to do this whole financial literacy education part. Here's what a bond is. Here's what a share is. That's the funniest question I keep getting. Oh, David, $10 a share, $100 minimum investment. What is the return that I'm going to get per year? And I said, what, you mean a guaranteed return? Yeah, what's the guaranteed return per year? I said, it's not a bond. It's like you buy shares in Google and you ask them what is the guaranteed return you're going to get per year. It doesn't work that way. No. There's this thing called capital appreciation and dividends. Now let me teach you what dividends are, how this works, how do you even open an investment account. So it has become this whole problem But at the same time, we're solving another issue. If more of us are financially literate, it means more of us are going to create wealth to then go and do other things. So that's the bonus of it. But it has now become a financial literacy business first, and then an investment firm second.
How can ecosystems like ACSIS, where we are sitting today, and we're all trying to actually meaningfully connect, how can that actually literally happen? So do we now need to go on an education tour and continue this? Because last year, so we all come here, and then I want us to all actually go away and do something toward what it is we're here for.
Yeah. So I would put it this way, we have to pay it forward. Everybody in this room already wants to invest in the global south, in the Caribbean, in Africa. So we're preaching to the choir in here, which means everybody in here already understands how to invest some sort of way, right? We talked about heritage tourism, we're going to hear about culinary and the real estate. We have, and obviously investing in companies. We're going to hear later about tech. So we already know, but we are now above the majority of the diaspora then. So we need to go back and tell two people. Just if one person here tells two people, the two people then can tell two each. And we can actually multiply the knowledge very quickly. Hey, I am investing in the region. Here's how I am doing it. That's what I'm here doing, right? I'm here to tell you guys, here's what we're doing, here's why we're doing it this way. I'm not saying give me money, I'm just giving you ideas for another way to do it. I cannot invest in every single country, and I cannot invest in all the countries at the time they need, right? I am focused on 4 Caribbean countries right now. We will now expand that to 4 African countries as well. So 4 Caribbean tigers, we call them, 4 African tigers as well.
Can you tell us what these countries are?
Yes, I'll tell you the countries. So on the Caribbean side, we're focused on the Bahamas, Barbados, Guyana, and Jamaica. Those are the first 4 for us.
Congratulations, guys.
And now, the main reason we're here today, I originally wanted to move us into Africa 2 years after we went public. So that was always our plan. The United Nations Development Program had me there 3 years ago in New York because they came across what we were working on, had me come and to meet with their team. So we're at the UN headquarters and they do a Zoom call. And they have all these people now, Nigeria, Ghana, Kenya, Botswana. And it's all ladies that were on the call. I mean, more power to you ladies. And I said, David, explain to them what you are doing to get capital from the Caribbean diaspora and deploying it down there. Explain the legal structure, the securities law you're using. So I went through in detail. And they were blown away, and they said, okay, do you plan to do this in Africa? I said, yes, all the problems we have in the Caribbean is the same problems in Africa. And in fact, some solutions are already in Africa as well, so we can cross-pollinate. Let's do both. We want to be a black-owned investment company, not a Jamaican-owned investment company or a Caribbean-owned investment company. Yes. And they said, okay, are you going to use a different company or the same company? I said, no, the same one. I don't need to reinvent the wheel and spend the money twice. The same one, but I wanted to start in the smaller markets, test it, perfect it, build the trust, have systems and processes in place, then find partners to go into Africa. But we've had so many people coming to us now with projects. This is now Ghana, Kenya. Those are the first 2 that we've been approached. South Africa, someone has brought something for us to look there, and we haven't picked a 4th country as yet. So we're open to finding the right partners. So I just talked about you already talking about Sierra Leone earlier. I heard there's a reggae event. So we haven't picked the 4th one, but we need to visit. And that was what we decided. I can't wait anymore. If people are coming to me right now, I thought somebody would have copied Bloomerhole for Africa already, to be honest. Or for maybe parts of Belize and other countries we didn't list. But no. We can't wait anymore. I'd rather that we raise more capital, bring on the right team, and let's go into Africa. We'll make our first trip to Ghana in March of next year.
Wow. David has answered so many of my questions that I already have. Like one of them was definitely about the legacies. This is clearly the legacy that you're planning on leaving. Yes. I want to let you finish off with a few words before I finish off. Anything else you'd like to?
Well, any question, because we're going to wrap up in less than 5 minutes. Yes. So is there any question in the audience? I like when questions are asked here because then the whole audience gets to...
I think there's a lady at the back.
Why not Tanzania? Because I have not met anyone who has shown me a project there as yet. So we need to meet someone who has local knowledge. We are not running into a country by ourselves. We want local partners. We need someone with local knowledge. So I'm open.
Very important.
If you want us to look at it.
Awesome. And then this gentleman in the...
And then in the back.
Where?
Hi, very, very interesting. My question is reasonably simple. What is your industry or line of interest, where or what would be of particular interest to you?
I like that one. What is our industry? So we are industry agnostic. We won't invest in oil and gas, but otherwise we are open. The idea is when you look at the 4 Asian tigers, so you think about Singapore and South Korea, Hong Kong, Taiwan, and how they grew, or you look at India 20 years ago, which industries would you have invested in back then? It's the same ones we want to invest in, right? When you have a middle class that is growing, when you have urbanization increasing, when you have wealth now being democratized, companies are going to be more publicly traded, right? More family businesses are getting listed on stock exchanges. We want to participate across the entire economic sphere. There's no specific industry that we feel is better than any other one. And we have to focus on what is best for that specific place.
Precisely.
So we have people who think we should go to tourism in Jamaica, and I say, no, I think that's full. If we did tourism, it would have to be a different kind of tourism.
I agree.
Heritage tourism, cultural tourism, gastro-tourism, eco
Yeah, no
tourism.
need to reinvent the wheel.
Right, no need to reinvent the wheel, and I don't need to fight and compete where everybody is already there. Blue ocean strategy, especially in the Caribbean.
Exactly. I think there was one more question. Is this from our founder?
Waving.
Hi, David, and thank you very much for heeding the call. How does government policy influence your decisions to invest?
Ooh, I love that one because...
Thank you, man.
It's crucial, right? So a lot of us, I did an MBA, Robert and I did our MBA at University of Miami, Herbert School of Business, and all of us learned SWOT, right? The SWOT analysis, strengths, weaknesses, opportunities, and threats. Most of us don't think about the PEST analysis as a second analysis that we're taught. Political, environmental, social, technology. The political environment matters. Right? There's a reason we haven't gone into Haiti as yet. Haiti is not one place, Port-au-Prince, but there are some issues there. So we're not going into there. Trinidad is not somewhere we're going into right now because I can't get my money out. And that's a political problem that has led to a currency problem. Right? So stable governments matter. Fiscal policy matters. Jamaica has set a trend of going from 142% debt to GDP ratio down to 62%. Thankfully, that now gives us a fiscal space to put out some bonds to do the rebuilding and help with that. How many countries are being that disciplined from a fiscal standpoint or have peaceful transfers of power? So I remember I spoke in March last year at a family office conference in Miami. So this was the Greenwich Economic Forum, Miami one. And of course, it's only white Americans that were in there. And I said, let me explain something to you because you're talking about risk. Well, investing in the Caribbean is so risky. And then they're bringing up Haiti as an example. I said, Haiti is not the Caribbean. That's one country. But more importantly, if I told you that there was a country whose debt to GDP ratio was going in the wrong direction, it was going up, and they couldn't do anything about it, and they were then, S&P downgraded them in October or November that year, the year before, you would think it's a country in the Caribbean or some emerging market country, right? That you would look down on us. It's somewhere in Africa, Latin America, or the Caribbean. I said, no, that was the United States. And then if I told you that there was another country that went from 142 to 60, at the time it was 72, and we were upgraded, you wouldn't think it's Jamaica, but it's Jamaica. I said, if I told you right now that we've had a country where peaceful transfer of power after every election since independence, no problem, you wouldn't think it's a country in the Caribbean, but it's multiple ones. But if I came and said, there's a country that you should invest in, and after the president lost his election, they actually went up to a Capitol building and people tried to prevent the peaceful transfer of power, you would think it was some banana republic. And the place, I was like, hey, but it was right here, and you're still investing here. So if you want to talk about risk, what risk are you talking about? Yes. We don't have even that level of risk. We're more stable, we're more well-behaved, we have better fiscal policies. We have a growing population, we have younger population, we don't have the age issue you have, a growing middle class. You should be investing where the next 1.5 billion of people in the world are going to end up being.
Oh my goodness, I don't think I even have many closing words. Ladies and gentlemen, David.
Woo!
Thank you.
What an inspiring conversation.